they share the most beloved and user-friendly wallet in crypto is launching its rainbow sale on CoinList. It's a 100 mil FDV, which is a 33% discount to the last round. It is available to US participants. The sale opens December the 11th. That's actually tomorrow. Okay, so this one's open tomorrow. And this little visual that you can click on, Max, is going to share what it is. So we've got vesting is 100% unlock. Okay, so you'd be fully liquid. 100% unlock 1 year after. Oh, for US participants, remember, always US participants will be liquid one year after TG. So for everyone else, it's 100% unlock. For US participants, 100% unlock after 1 year. And that's 3% of the token supply. Minimum purchase is $100. Okay, so that's fairly straightforward. Brad, do you have a thought on valuations here? Do you think that is reasonable? I don't think we have a good comp. I think there are some wallet tokens out there, but none of the main wallets have one yet, right? Like Rabby doesn't have one, MetaMask doesn't have one. Magic Eden as a wallet, it does. I mean, Magic Eden have a token, but it's not necessarily got anything to do with the wallet. Do you have a view on wallet tokens?
I really don't. And most of it is just because it's super, super opaque for like what they're earning, right? So we're entering into this meta where we're entering into the phase of crypto where we know how much these fucking things are making, right? And like how much of that stuff is going back to the token, what the token represents. Like, I don't know, maybe we're actually critically looking at what these things are. And to do that, you need information. And to my knowledge, the only one that we have any kind of visibility into and can like track some revenue numbers is Phantom. And like they're the kings of the castle. I think you could probably track a little bit of the MetaMask swap, and maybe this is going to inspire me to look at some Dune dashboards to see if we have any kind of reliable data. It's just, to me, it's fairly opaque, and there's no like one-stop shop to say like, oh, this wallet is making 100 million a year, which would help me value everything else.
Okay. I think that's fair.
I'm bullish on them owning the users, though. That's we do.
That's why Farcast is pivoting to be a wallet, right?
Yeah, probably. I think I have separate commentary for that. I just think, you're never going to be able to compete with the network effects of X. So like, it's just, I've always been bearish on Farcaster for that reason. But yes, like broadly, the industry is going towards trying to own the user as much as possible, right? Like if you own that, you can backfill basically everything else. So if you can sit there and you can capture the user, just like, I mean, Phantom is the best example of this, right? Phantom has a captured audience and they're backfilling an entire perps exchange and just like scraping 1% on top of it, going to and from Hyperliquid, right? They didn't have to do any of the Hyperliquid stuff. And you know what? If a competitor comes up for Hyperliquid, you know what happens? Nothing. Like Phantom users still use Phantom and they just direct flow to this new thing. Yeah. So if you own the user relationship, you ultimately own the bigger piece of the pie, and everyone in this industry is trying to get closer and closer to that. And that includes chains, that include like, it's the exact same reason that Solana is trying to build a phone, right? They're trying to own the user at that instance, and then they're trying to on the back end route that to whatever they want, which would be Solana and fees and everything else. So I think I'm bullish on the vehicle, but it's a very, very competitive market, and it's kind of opaque right now.
I like it. I don't disagree with anything you just said. I think the wallet token, I mean, to be fair, I just found a different tweet. We don't need to necessarily pull it up. But they said what they will be doing, and this is Rainbow. They will be, where is it? They said they're going to have real-time rewards. I can't find it now. I've got so many tabs open. They said they're going to have real-time rewards backed by revenue. So I'm going to try and find the number exactly, but if anyone wants to check it, it's in their it's on their main page, so you can go and check there. Oh, I want to move on because there's a few others, since we're doing a little ICO tour this morning. And Brett, I even forgot one, a different one as well. So we got another one to get to. This one we're pulling up now is not an ICO. It is a pre-deposit vault. I kind of like this, Brett. We haven't done this, but we're doing like a little a tour of the ICOs or stablecoin opportunities. But we need to do this every now and again. Max, I've just stuck this one in the chat now. So what we're looking at here, when Max is going to pull this one up in a second, this one is called Daylight Energy. Now, this one is not an ICO. This is a pre-deposit vault. And what they're going to do, so Daylight Energy, actually, just to give you a little bit of context, is backed by A16Z and Framework, both, good, reputable VCs. They are opening their vault on December the 16th. So this is actually next week, 8 a.m. Eastern time. And it's a pre-deposit vault. And what they're doing is it's going to mark the beginning of the Grid Games, DeFi's campaign to scale ecosystem liquidity to support capital markets for decentralized energy. There's a whole article diving into what that means and how you want to read it further. And we don't have time to look into all of the details today. But in terms of some of the mechanics, vault deposits will be deployed to Plasma, where K3 Capital will manage a diversified yield strategy. I think this is important to note because if you want to know what people are doing with your stablecoins, so here it's actually being actively managed. In addition, 1 million XPL and boosted Grid Games points and multipliers can be earned by participants in the pre-deposit. The pre-deposit will accept USDS and USDT, and will have an initial cap of 50 million. Deposits will be locked for 2 months, during which time K3 Capital will bootstrap DeFi ecosystem liquidity with the vault. And so you're kind of earning Daylight points as well as some yield here, I think. And then you've got you're locking up for 2 months. I like here, Brad. I don't know what you think. I like seeing the 50 mil cap. 50 mil in this space is not that high. And so my suspicion would be for something like this, this will get filled quite quickly. And for two things that people might be thinking. One, it's on Plasma. I see no issue with doing things on Plasma. I know it's not as high as it was before, but to me, that's not a concern in any way. And I think there's a few other narratives, and maybe we'll be talking about one of them later in today's show when we talk about like space exploration. Of course, we're no experts in that. We're also no experts in energy, but you can see the direction the world is going in when the focus is on things like energy, space, rare earths, and things of that nature as we kind of come to terms with the next set of issues the world faces. And it would not surprise me that crypto has to, in coordinating capital, goes towards solving some of those issues. And my instinct would be that they should be maybe more valuable than some of the things in the past, or at least be of interest to people. So that's my quick take here, Brad. Curious for your thoughts on Daylight and this pre-deposit campaign.
Yeah, mine is probably less about Daylight specifically and more about the pre-deposit campaigns.
Sure.
And for me, after our fiasco, I'll deem it, where we had the pre-deposit campaign and people filled it up exceptionally quick, and we just realized it was not the right fit for our ecosystem. I think I'm just kind of generally bearish on anything that has like this imposed, not imposed, but like if you have the caps on there, people are implying that are going to assume that you have some kind of rewards associated to it, which is why you have to have a cap so you can reward the right people with the right stuff. And it's just impossible for people in this industry to see that stuff and go, oh, this is going to be a modest return for a decent little thing to facilitate the need of the thing. They're going to see it and they're going to try to make it a trade, which is what happened to us. And then it kind of self-selects for people who are probably not the best people suited to participate in the actual thing itself, right? To meet the needs that to meet the outcome that you're trying to with what the pre-deposit is, right? This is probably to seed some liquidity in the ecosystem, to get some things going, to like prime the system and just like give people a head start. But the problem is you have people like CBB who see this and go, bro, I'm just going to park stables for a little bit, then fuck off. Right. And that is just people getting in, eating up the whatever APY this actually makes up, and then just like fucking off, like they're not contributing in the right way. So for me and for us, which is why, people may have seen on the timeline, we plan on reopening ours, but we're going to over communicate that MFers, it's literally just to like make sure you guys get some dollars on the other side day one, and there's no rewards associated to it. There's no caps, because if you do a cap, then people are assuming the rewards. Yeah, I'm pretty bearish on these. Bearchain did this. They got a couple $1 trillion. Plasma did it. They were up at $6 billion. Now they're down to like $1 billion in stables. Daylight will do the same. I just think it self-selects for the wrong type of participant.
Fair enough. Definitely a couple of perspectives to go with there. I guess in the newer protocols defense, I think Mega's in a maybe slightly more luxurious position where you can maybe opt for what you want more than maybe other teams, in the sense that these are probably smaller teams, even though they're reputable and doing well. I think you were in an awesome position where sentiment was so good, and maybe you can be more selective. Whereas if you had to put a gun to their head and these other teams, as like, do you want the money? Are you willing to pay the price of maybe some farmers getting in early? Especially if you think about this environment here, Brad, like, I think, Mega in all instances will be fine. But these teams now, and the reason why we're doing this little tour today, just quite spontaneously, is because all of these things are competing for your USDC in the next 7 days. Like, they're all in aggressive competition with each other. So does it make sense for a team on Plasma doing this new kind of energy thing to, maybe constrain it a little bit, out reward those people, and just take the risk? That's a problem that you have to deal with down the line. Will these people stick around? Will they won't? Well, at least for the next few months we're seeded, and we can like report that as good news, and we got that kind of W under the belt. And then you kind of you kick the can down the road. And I completely know what you mean, that teams have done that before, and then it just delays the inevitable thing. But maybe founders are trying to back themselves and like, look, we'll figure it out. We'll figure it out later, even if there's so many examples where that's been a very hard thing. Do you have any reflections there, Brad? I've got two more to touch on today.
Yeah, my final sign off would be, it's not the sexy thing, or it may not be the most um obvious thing for people to do, but like, man, building up ecosystems and building up projects and building up liquidity just frankly takes time. So I think it's just accepting that it does not all have to happen day zero, and like
Yeah.
allow the thing to naturally grow on its own is the hard path, because it is not the flashy path, but I think it is ultimately the right path. So even for these guys, like, they do this, people come in, they farm, they're probably going to get a decent size of the tokens from the emissions or whatever, and then they're going to leave, man. Like, it's not the same stuff. So like maybe if that, maybe that's a marketing expense, and that's how you kind of view this, and if you allocate the right amount of tokens to it, maybe that works out. But otherwise, I don't think it's actually productive capital that ever forms for this kind of stuff. And if you're trying to get it to line up for something on the other side, which is a DeFi position, it's a whatever, I frankly think you just need to be more direct and just like incentivize that specific thing, as
Mm.
opposed to like the incentivizing just getting in position to do the thing. I don't know. I don't think it's a good move.
Yeah, I mean, the one thing I actually, my line of thinking is that it's okay, but the reason why it's okay is you need to get people through the door. Once you get through people through the door, in the end, you'll be for that capital to stay. The yield needs to compete with alternative yields, right? And I have no idea what the yield is on decentralized energy right now. If I'm being completely honest, like, I don't know what type of return I'm going to get. Just like, how with USD AI, it was like, it's it's GPU backed loans. And I don't know what the market is for that. But if it turns out that, okay, you can actually get this, forgetting the incentives, because obviously there's incentives to get you through the door, but forgetting the incentives moving forward, maybe there is an interesting market for that. And if you can get, I don't know, 12%, something that's a bit higher than, I don't know, what you can lend on Felix and Hyperliquid for 7%, because it's obviously going to have to be higher than what you can just lend normally in a Morpho fork or an Aave fork, which people would consider to be far less risky than a GPU backed loan. So yeah, you're going to have to be higher than that. And if you can be, then maybe it's interesting. But if you can't, this is my concern with some of the RWAs coming on chain and like bringing that type of yield on chain. It's like, well, if it's not high enough, then you're not going to, you're all in competition with each other. So that number just needs to be strong. Afterwards, there has to be reasons for people to stay there. Um, so I agree with you in that respect. But maybe I'm framing it more positively, where it's like, okay, well, make it worth people to be, make it worth people being there, make the product worth it. Okay, two more, which I want to get to. I'm enjoying this little tour. So me personally, I know, Brad, you got some questions around the deposit, but I kind of like this one. But I also want some type of energy exposure. This is obviously not like real energy exposure, like a stock would be. But given that I like crypto a lot, I think I'll try and do this one. Okay, next, Octra. This is the next one. So Max, I'm sharing this one in the chat. Apologies, I should have given it to you a moment before. So we've got two more announced in the last 24 hours. Pretty crazy stuff. So Octra, between December the 18th and 25th, Octra Labs will be conducting a public sale of OCT, the native utility token of the Octra network. The ICO will be held using Sonar, which is obviously Kobe's public sale platform via Echo. Registration for the sale is open now. So if you want to participate in this one, you can do right now. You can do it by the link below. 10% of the token supply are allocated to the sale at a fixed price of 20 cents, implying a fully diluted valuation of $200 million. So this is one's at 200 mil. All tokens are sold unlocked and will be distributed encrypted. So this is the point of Octra. Octra is a general purpose encrypted compute network that can be used both as a standalone L1 and integrated into existing ecosystems as a decentralized and stateful coprocessor. It utilizes a 100% proprietary, fully homomorphic encryption. Gosh, they really don't want us to understand what this thing does. Scheme built around hypergraphs that allows the network of nodes to compute on encrypted data without decrypting it. Bread, going to lean on you a little bit here. You're going to tell me what a fully homomorphic encryption is? Is that what you're going to do right now?
Yeah, so it's
Oh, you actually are.
people often conflate it with ZK, where ZK is like, I do something, I don't reveal what the thing is, and you get the output, and you can just like by way of knowing the output, you can know like that it was actually true. Fully homomorphic encryption is paired with that, and to say that you can actually do some of the stuff that is fully private, but you can also understand and program against the private inputs, right? So as an example, right, like in a fully ZK world where I say the answer is 9, right? And you go, oh, well, the inputs could have been 5 plus 4, could have been, 4 plus 5, could have been 8 plus 1. Like you don't actually know, which means it's very hard to program against that because you don't know the inputs. It could be, A plus B, or it could be A plus C and B and Z. Like you just don't know. But know the output is 9, and you can prove the output is 9. In fully homomorphic encryption, you actually have the ability to program against it's going to be A plus C. It's going to be A plus C minus D, or whatever, right? So it is just a new form of encryption that allows you to actually be able to program against it. The problem is it's a little novel right now, so you don't have as much advances on it to be able to implement it in real world scenarios. It's very costly.
Brett, you know what? Every now and again now, I think you're telling me this is further away from reality. Better. The further it is away from reality, from this kind of speculative perspective, the better. The more complicated the fully homomorphic encryption is, the better. Especially as Zika. I mean, look, I think there's going to be all kinds of things raising on a privacy angle now, right? And those things will probably catch a bid for a variety of ways. I do not profess to have the technical expertise to know about this enough to say if it's a bid or not. I do like the fact that if it's an L1, which it is, it's jumping on it's not jumping on necessarily. I don't know how long they've been building for. This is new to me, but it sounds very much in line with the privacy focus that has captured the space's attention recently. And to be honest, purely based on instinct and of doing this a long time, not knowing anything specifically about that industry, 200 sounds pretty decent for me. 200 mil FDV for that specific type of thing. So I don't know. For that one, that's like I need to read more on this one. But instinct, not bad, not bad at all. Do you have a specific thought there, Brad?
Not really. Like for me, like yeah, the number for a chain sounds decent, but then you start looking at the field for L1s and L2s these days,
Yeah.
and frankly, it's very top weighted, as you would expect. There's a big power law playing out, and then you start. I think we're going to continue to start seeing other chains fall away unless you have some other kind of actual revenue generating process underneath. So like for me, it's sexy, like because it's using the FHE, but like it's so far away, and I don't think narratively enough. It's like, yeah, it just doesn't appeal to me. Not at these numbers, no.
Okay.
Tough road to hoe. I said that already once today, so people are going to start bagging on me in chat. Like, what was the word that I kept using? Ephemeral. So, ephemeral road to hoe.
Right, yeah, got it. Yeah, that's funny. Okay, so those are very fair points, and maybe the final point I'd make is I don't know anything about this team. I really, really like backing teams who I've done some research on and a founder or co-founders that I figured out in some way. I need to do that for this if I was going to participate. Okay, last one, and I know we've only got 50 minutes left. We will get to the headlines in a minute, but I'm kind of enjoying this little tour that we're going on. So the tour has gone to now Legion, Legion and Sport.fun. Remember, football.fun first has kind of evolved into Sport.fun as they added not only, well, it started with football, as in the original football, i.e., the world football, and then they added the American football, and therefore they're now Sport.fun. Looks like here, I'm just trying to see if we know any specific details. Um, they said since launching in August 2024, the platform has proven exceptional product market fit, $90 million in trading volume, $10 million in revenue, actual revenue earned, not TVL. That's pretty impressive. $30 million in user deposits from 20,000 unique paying users, 71% week one retention among paying users. And it's the number one consumer app on base by revenue during Q3. I would say they obviously had a very explosive start, and there was that maybe 7-day period where even people who didn't know anything about football piled into football.fun to kind of participate and speculate. And maybe some of that led to its exceptionally high ranking. But when I was using it and playing with it, and I've spoken to the team a while ago, um, it looked and felt good, and they were kind of iterating on some of the issues that they did experience. But I thought it was very nicely built with an excellent idea. So trying to see if we know any details here for this one. There's a long article written, and but maybe just the thesis being shared is that the upcoming token sale will happen simultaneously on Legion and Kraken launch. So Legion and Kraken have kind of partnered up a couple of times now on these launches, and prospective purchasers can apply to participate on either platform or both. Unlike first come, first serve sales, your allocation will be based on merit, not mouse clicking speed. On Kraken, token allocations for the launch sale will be made according to Kraken's own merit-based criteria, whereas the Sport.fun team will assign remaining allocations to purchases based on their Legion score and other selection criteria that will soon be published. So I can't see a number here. Maybe there's going to be more numbers given. It says learn more about sport.fun at on the Legion site. Classically, token sale is not available for UK people, so apologies for my fellow Brits out there. You cannot participate. But aside from that, Bread, look, we don't have the numbers here. Maybe they're on the Legion site, which I haven't clicked through to, but some impressive numbers, right? From football.fun. Number one consumer app on base in Q3. I don't know if you ever experimented with it in general, but what did you think of maybe just some of those numbers and metrics? And have you heard of the team at all? And what did you think?
I heard about them, like them. My critique is going to be the ticker. I'm the ticker czar, and I am very critical of people selecting their tickers. I think XPL was a dumb ticker. I now think fun is the dumb ticker for these guys. They
I
should
think
have done
fun is
sport.
a bad ticker.
I think because it's a pump funds. Pump fun is the thing, right?
I
So
think it
like
should be sport.
I think it should be sport. Like they're not like fun does not in my mind make me think sports. Like I mean, it does. I like sports, but like it does not tie back to your actual product in any way. So I think they could have done. They had to do the full name too. If they would have done SPRT spurt, that would like that also would not work. So it had to be full name, 5 letters, sport. That's what they had to do.
Okay, I mean, maybe we should just review tickers. Maybe
I would. I'm
the
very critical of tickers in this space.
the next version of this tour will just be a pure ticker review where we'll do a 5 stars, and try to figure out how many stars they get just for the name. Okay, so just checking the YouTube comments. Hope that was helpful in Senzi. I know you were shouting out, asking about the football.fun one via Legion. So that's that. So the reason why I wanted to go through that is just to really almost think through it myself. It's like a live quick research before I double click on that stuff post show. but there's a lot of things in competition for your stablecoins right now. And I think the thing that I put in Telegram chat this morning, as we were kind of coming through, as the feed of news was coming through with all of these raises of different types were coming, it was something like, it's the time to be discerning and it's the time to read. Like, I think you could potentially lose a lot of money in this period of time as everyone uh, thinks that they can sell a couple of percent of their token for a couple of mil or however much money they want to raise. And you've just got to be very diligent, pick the ones specifically that you like based on the valuation, based on the team, based on the unlock schedule. And based on your bullishness for that particular sector. And I think we've discussed some of those aspects in all of the ones that we went on tour with today. And not all of them you can tick all the boxes, right? But you kind of figure out what you're comfortable with, and that's how you allocate based on that risk. So, Brett, any reflections there on that little tour? How do you find that? Any final thoughts before we we do like a speed run of the actual headlines?
I'm glad we did it. I'm actually, well, maybe trying to leak some alpha. Like I'm very bullish on trying to get an ICO platform on Mega. I think it's very conducive to what we're trying to do, and I think you need capital formation on chain for people to be able to participate in, whether it's permissionless or not. So whether you like the Futarchy stuff or some of these other platforms like the Echoes, the Sonars, the whatever. I just think it's very important for these ecosystems to have capital formation on there and to give teams above or below the like top tier the ability to raise from the community in the right way. Like I would say launchpads is like the lowest level, right? You literally just like TLDR launch a shitter things. People can buy it. You can try to make money on fees or whatever. Above that, you should have some kind of ICO, Futarchy, whatever platform for people that are maybe not large enough to do a full-fledged release. And then, you have the suite above that, like what was it? So I guess it would go Launchpad, then like Echo, and then Sonar, and then you have like formal raises on like Coinbase, and it just kind of keeps going up the tiers. But I think you should service all of these cohorts. So I'm glad we're talking about it. I think it's the future. I think we'll continue to see this.
Okay. The reason why I absolutely agree with you is because even in a scenario where some of these become unprofitable, you just need to make the valuation better. And so like tokens can fail and not do well, but just take XBL as an example. Plasma raised at a $500 million FDV. Even now, where with the token down to, I don't know, around 2 bill, that's still a clean 4x on the initial thing. So if something doesn't go well, or if something goes well and then it turns around, I think the thing you have to watch out for is teams getting too greedy, trying to sell at too high a valuation, not allowing enough room for people to be profitable. But if it doesn't go well, and this is your point about the longevity of ICOs and why it's important to maybe have one on your platform and in your ecosystem, because you can just make the valuation better, like just make it more attractive so that an investor is tempted to come in. And there should be a number at which that is the case. And if you burn investors too much, then yeah, they're going to pull away, but you can pull them back with just a better number. So you just got to be flexible. So I agree with you because you can play with the numbers ultimately as the founders.